Today we're going to be breaking down the 12 candle window a bit more in detail, and we're going to talk about where is the money. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's Monday, we've started the week off. Just a reminder, Thursday, October 15th, that's this week, the PEPPERSTONE webinar with myself and Weston. Put the link below. Last day I forgot to put that in right away. Today I've done that. Again, book your spot. We've had a tremendous response. I spoke to Chris earlier. We've got a run sheet. We're going to be going through quite a bit of material. He's compiled a ton of data. It's going to be a fantastic night. Be sure to book your spot. At this stage, I don't think there will be a replay of this. It is only going to be a live event. Trying to find out if we can get a copy of that. But book your spot. It's going to be a very informative night. Brexit, US elections coming up. There's plenty of stuff happening in global markets. Over the weekend, I received a ton of emails regarding the 12 candle window. A lot of traders starting to understand the concept of the high and the low being formed in that by the time that equity hour prints. We're going to answer a couple of questions, but we're also going to go in depth just to break this down a little bit further, understanding that each 12 candle window, the market will potentially now be conducting a stop hunt, a trap, and a trade. And whether or not we're at the high of the previous day or the low of the previous day, that can turn into a larger trade. That can also help traders understand the difference between a breakout pullback and a continuation versus a false break stop hunt reversal, or just being stuck in the trading range. And also the 50 pip round number boxes. So the previous day's high and low, obviously we know there's money above there. Now, to answer another question that I received from a trader, why don't I call it support and resistance? Okay, that is a retail trading term. It is not support and resistance. That is a retail technical analysis term. When we are at the highs and lows in the currency markets, this is a zero-sum game. They are there to clear the stops. That allows them to transfer money from somebody else's bank account into theirs. It's a zero-sum game. So when they hit the stops, even if it's resistance or support, they will hit the stops because that is where the bulk of the retail market's orders are sitting. There are other time frame traders sitting there, end of day traders, 4-hour traders, smaller retail traders, smaller hedge funds, position traders. There's a ton of orders there. Take profit, reversal orders, on entry orders, all these little things. But the bulk of that is about hitting stops that are stop losses to minimize their loss, and also triggering breakout orders in the wrong direction. So it's about the money. It's about the money. That's it. There's nothing else. There's nothing else going on. It's about transferring the money from the many to the few. So forget that term support and resistance. Today's high and low is important if we have not touched the previous day's high and low, because again, they're going to be building up volume inside of those levels. Now, in most cases, when that first hour prints, do they go to a high or a low? Whether it's of the day, the previous session, that first hour now, if it breaks higher, we have a low here. We have a low. We have a low in place. So the other question I received was, why as the day evolves, do I call a high or low the new low of the day, or a lower high than the new high of the day? Because every time the market moves to a new level and we get new highs or new lows, so we get a higher low, this is trapping volume. We're trapping volume up here, and that volume equivocates to dollar signs, okay? So even if this is going to be a trend trade, if it's a trend, they're going to break out and they'll have a stop hunt back and they'll continue to move. But if they are working up, this is still the new low of the day. And at some point, if they lock in the high and come back through the low of the day, okay, I'm going to be at break even here if I'm not targeting more than 25, 50 pips, whatever that may be. But that is the new low of the day. So once they hit the stops on the new low of the day, they may come back to hit the stops at the new high of the day on the traders who have shorted the market before rolling over for a measured move. Okay, so that's my interpretation. You can call things support and resistance. You can call them the original Asian low of the day. So you might be waiting for this to come down here and hit the low of the day. But meanwhile, you've gone to break even, or you're sitting in this trade. They've hit the low of the day. Once they get here and they clear stops, they're going to go back here to get this guy. Then they'll go back down to get the guy who's long, and they might even lock him in because they've made him chase a price that's poor, higher up inside of that range, rather than being down here for the long. So higher lows, lower highs. That's the first clue that they're trapping volume down low, because those lower highs and higher lows are where swing traders, call them swing lows, swing highs, are chasing the move. You're getting higher level longs and lower level highs, or sorry, shorts. So they're getting traders to chase the move, and the key to understanding whether or not that's happening is the timings, because if it's happening as we head prior to that 12 candle window, guess where the stop hunt's going to be? They might even take you further into the trend in that first hour, because traders think it's going to run away without them, because it's starting to move, it's starting to go. They want to get in here, and then next thing, all of a sudden, out of nowhere, it goes back in one candle, two candles, three candles to the high of the day. So timings are critical. So in that first hour, which direction do they go? Do they go down? Chances are we're going to see a move up. If they go up, chances are we're going to see a move down. Now, again, understanding the difference between a breakout versus a stop hunt. And most stop hunts, as we said, were 25 to 50 pips. So if we have been making higher highs and the market breaks through the high in that first hour, then I'll expect to see a stop hunt back against the trend if we're going to go for a trend continuation. And it will be in that second hour. Remember what I said, by the time that second hour has printed, we have our high and low in place, and then they will either hit it again a second time. So if it's an extended stop hunt, we may get a second hit to that high, or they may have extended it out and then gone into consolidation, which is where, answering another question, going to a shorter time frame. I don't recommend that. I would suggest mastering that 15-minute. You can do that, but in all reality, your stop probably won't change that much. So even on a 1-minute chart, often we'll see 15 pips minimum. So you're looking at 15 to 25 pips, and in a lot of cases, those 5-minute entries and the 1-minute entries that are actually the valid entry into that trade before it moves are usually going to be towards the end of that 15-minute candle closing. So your risk is still essentially the same. You're either, if you're at the high and they're locking it in and you might be at numbers, you're looking around 15 to 20 pips, unless they've put a big spike through, which again is another confirmation that they're probably done doing business at that level. So laser-like focus and understanding, are they extending the range, that stop hunt, back out? Are they going further away in that second hour? So 1 candle, 2 candles, by the time that third candle has printed, you probably have your high or your low in place. Now again, we get a high and a low in place. That doesn't mean that's the trade. They may go back and hit it a second time, or they may lock it in and go into consolidation before they move the market. And that's where price action behavior comes into play. So we talk about engulfments and pin hammers. That first engulfment is where they may be locking it in. Now in other trades heading into New York, they may have already locked in the low or the high of the day, and they go back and hit it the second time without taking out the high or the low. Traders are waiting for them to go and hit the high or the low, but they have already locked it in, and that's where you'll see the pin hammer. We saw that on Friday night. The pin hammer is where the stop hunt on that pin has gone back and into the trader who's already in the right position to shake them out. They might be in on a 1-minute, a 5-minute, whatever, or they might even be in on the 15-minute, but that's the tail that goes back one more time if they've gone to break even to stop them out before pulling away. And those algorithms are usually within a pip or two of getting everybody stopped out at break even. So again, just revisiting the concept that those algos kick in at time, and then they work price. And price is high and low of that session, of the day, of that trading range. And again, today's high and low. Have we hit any previous sessions highs and lows? London, New York from Friday. Have we hit those yet? Are they the extremes that are in place that we need to hit? So how far are we from the low of the day or the high of the day when this London candle opens? Are we 15, 20 pips? Well, then you're probably looking at a 25 pip move. Do they extend this out another 25? Remember, most stop hunts are 25 to 50 pips. So if they go 25 pips outside of the Asian range to the next quarter level, now you're looking at a 50 pip move, possibly from high to low or low to high. These are the little things you want to be thinking of. And then timings. By the end of that second hour, I can assure you we will look at the charts, and I'll show you from Asia this morning. You pick a day, doesn't matter. By the end of that second hour, you will have your high or low level. They will either go back and hit it one more time for the reversal, or we'll already be in a breakout pullback, and the end of that second hour will continue the trend for a measured move. Let's take a look at some charts. Remember, Thursday, book your spot. Chris has got a ton of material he's going to go over. We've had a massive response. Thank you for the questions and emails. Hopefully that's making sense. This is my focus, the 12 candle window. And I'm going to venture out there and say there are lots of other ways to trade, and you need to personalize that based on your own approach to the market, your own beliefs. But there's 50 pips a day coming out of this 12 candle window, pretty much in both sessions on at least one of those 4 or 5 British pound crosses. So stay disciplined, stay focused. Last week was a great week. We're going to get bigger moves. Last week was not the best on the daily ranges in terms of the technical side of the charts. We are about to possibly head into some big moves. So stick to the basics, master your trading process, focus, and just to revisit one concept. The trades that I'm targeting are ones that I can scale up in size. That's where I'm really focused on. I'm not worried about chasing the move out. You can get in that, but I'm looking for when they lock in the high or the low, and they're going to move it back in 4 or 5, 6 candles, and sometimes 2 candles for a fast move for 50 pips or more. So stay disciplined, stay focused, keep it simple, traders. Focus on the clock, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Just continuing our discussion in the 12 candle window, looking at the first hour and just reviewing this morning. Okay, so we've come out of the U.S. session on the British pound Aussie. We've taken out the U.S. session swing high, the lower high of the day, and we cleared above that this morning into the close of the rollover of the U.S. session. We got round numbers up at Friday's high, and again, our first hour went straight up to the previous Friday's high, and then we had our 25 pip stop hunt back into the trend. So the equities hour was the move back into the breakout, and then we formed our working the low in our W structure for a move back in the long direction through the high of the day and through the high of Friday. So we have our W and possibly a peak formation. We have our W on Friday. They've gone into consolidation. We obviously have stops underneath of the Asian swing lows. Currently in this first hour, we're just now heading into the second candle. The market has started to move up. So we potentially will either have a move back into the breakout, so a stop hunt down for a continuation, because now we are breaking to new highs, and we're breaking to the highs of not only the current day, but the high of Friday. And we have our W in place from working down. Now there are profitable trades back on Friday's U.S. session low, but if this market continues to make new highs, we may see an equity session stop hunt back into 50 for a continuation trade. Now, if we just crunch this down and have a look at last week, we can see that the market has swing highs from Thursday and from Thursday's London U.S. session. So obviously previous highs of the week up around that 81.25 level and up. We're making new highs. We've taken out Friday's lower high from the London U.S. crossover and had our W put in place. And again, they brought traders up this morning in Asia to sell it down. They worked the low, and they've broken higher. And we're currently now moving higher, but if we were to see a stop hunt back down, we'd be looking for the long trade and the continuation in that equities hour. Just blow this up a bit. So again, just to reinforce the simple concept that in that 12 candle window, so they moved higher and they put a high of the day in place, and then they came down 25 pips and put a low of the day in place. Most stop hunts are 25 to 50 pips. They moved it up first and made a 25 pip stop hunt back into the range. We're now currently moving higher. We could see a 25 pip stop hunt back down for a continuation, or they may extend the range higher, drag traders up high before selling it back down, or we could get 3 pushes down and then a continuation in the U.S. session. We'll take a look at the British pound. Again, we saw the big move off of Friday's low, again in the 12 candle window. They made a low, they made a high, and then they pin barred and continued that move. We had the London high, the U.S. low. They worked the low on 3 pushes and then pulled away. We've now gone sideways inside of that quarter range, and we've headed up to round numbers. The market has broken through the round numbers in this first candle, and currently now just trading at that 50 level. So again, if we move this chart closer, we'll look at Asia in a second, and just zoom in, we can see this market is already breaking to new highs. And in that first 12 candle window this morning, we had the first hour put a low in place and then a high, and then the equities hour came down and hit the low of the day. Very tight range, obviously, but they hit the low of the day a second time. So they put a low of the day in place in that first hour and then a high of the day. The equities hour opened up down low. They hit the low. We get a bullpen engulfment reversal and a 1, 2, 3 down and a continuation long. So currently this market has pulled back 25 pips from Friday's close, gone into consolidation, worked the low, and continuing that long move up. So if we see this market move higher, we could see a stop hunt back down for the continuation. If they were to put a high of the day in place, this will get traders possibly shorting the market for a continuation long, or they will work it and hit it a second time and engulf and move back down to get traders from Friday's U.S. session lows. But again, the 12 candle window, the high and low were put in place in that first hour, and then the equities hour hit it a second time, pulled back, worked it down in a 1, 2, 3, getting traders who were already long before shifting away with the engulfment, even in a tight trading range. First hour will either be going higher or lower. If they go sideways, the second hour was going to break one of those highs or lows. And again, in this current situation today, we've broken to new highs. And going back to the pound Aussie, we're working the high. So we're either going to see a stop hunt back down in the equities hour or an extension of that range for a possible sell high scenario back into the early morning breakout at the end of Asia. Stay disciplined, traders. Stay focused. Study those 3 1-hour windows. Are you going higher for a sell high, or is it a breakout, pullback, continuation, or going lower for a buy low? Keep it simple. Stay disciplined. Focus on that equities hour high and low, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.